Today, everyone is talking about cryptocurrencies, but almost no one explains them without exaggeration. So let's do it right. I'm not going to tell you that with $1,000 you'll become a millionaire tomorrow, or that this is risk-free, because that's not true. What I will show you in this video is how the crypto world really works in 2025, why Bitcoin remains the central piece, how to choose the right coins, how to store them securely, and how to use long-term strategies, including compound interest when the platform allows for your capital to grow over time. Let's start with the basics. What is a cryptocurrency and what problem does it solve? What is blockchain and why is it so hard to counterfeit? What are the main categories? Bitcoin as a store of value, DeFi networks, and stablecoins. And when is it advisable to use each one? Why is this important? Because many people enter with the promise of quick money, do not understand the system, and end up falling for scams, leaving their crypto poorly stored or buying at the worst time. The idea of this video is for you to stop investing blindly and start doing so with discernment. In the end, you will understand why Bitcoin is consolidating as a digital gold, how to protect yourself from inflation, how not to leave your money exposed on insecure exchanges, and how to build a realistic plan that you can maintain for years, not days. And yes, we will talk about that point that almost no one explains, the power of time and reinvesting rewards. It's not magic. It's understanding that if you receive a return and reinvest it into your strategy, long-term growth accelerates. But we will also look at the conditions, that the platform allows it, that the asset doesn't crash, and that you understand the risk. If you've ever felt lost among so many terms, if you didn't know where to start, or if you simply wanted a clear guide to invest without falling into empty promises, stay until the end. This is not a casino, it's a new financial infrastructure. And the sooner you understand it, the better you'll be able to take advantage of it. Let's go inside. So keep going. It's great that you're interested in investing and building wealth. Now, let's dive straight into the heart of the crypto world. I'm sure that after this, you'll understand it like a true professional. Stay focused, because in the next few minutes, you'll discover why this opportunity is unique and how you can take full advantage of it. Let's go to the next level together. Before thinking about strategies, let's go back to the essentials. And the first thing we must clearly understand is, what is a cryptocurrency? Cryptocurrencies are not just digital money, they are a new, global, decentralized financial system. They work thanks to a new technology called blockchain, which is like a big public and shared ledger that records every transaction made by an investor. But the coolest and most innovative part is that it's not controlled by any central bank or any government. You see, when you make a transaction with cryptocurrencies, it gets encrypted and transmitted to thousands of computers around the world. Those computers verify that it's legitimate by solving complex mathematical problems. For doing that work, they receive commissions, ensuring that the network is secure, trustworthy, and resistant to fraud. Once validated, the transaction is permanently recorded in a transparent and virtually tamper-proof way. Blockchain isn't just for transferring digital money, it has huge and diverse applications. Among the most notable are, for example, electronic voting systems where transparency and security can truly be guaranteed. Others like reliable medical record management, smart contracts, decentralized cloud storage, copyright management, faster and cheaper international payments, supply chain tracking, and all of it far from corruption. Today, we are only seeing the surface of what this technology can do. Now, let's move on to understanding the three major categories of cryptocurrencies that exist. To avoid getting lost in such a large market, we're going to classify cryptocurrencies into three major types. First, store of value cryptos. These are assets designed to protect against inflation and the devaluation of traditional currencies. The best example is Bitcoin, known as digital gold. It has a limited supply of 21 million coins. It's impossible to counterfeit. It can be transferred anywhere in the world in minutes and is censorship resistant. That's why many investors see it as a long-term store of value, very similar to what gold has historically represented. Second, decentralized finance, or DeFi, is an ecosystem of financial applications and services without intermediaries like banks or insurance companies. This DeFi system allows for automatic lending, peer-to-peer crypto trading without the need for centralized companies, programmable insurance, interest-earning savings, and much more. The most important examples are Ethereum and Solana. These two are among the most important networks for these types of applications. In fact, Ethereum was the blockchain that introduced smart contracts, programs that run automatically when certain conditions are met, enabling all kinds of innovations. And third, stablecoins. These are cryptocurrencies whose value is pegged to a traditional fiat currency like the US dollar. For example, USDT or USDC are backed one-to-one with real dollars. This allows value to be moved across the blockchain in a stable way, avoiding the extreme volatility of other cryptocurrencies. They are widely used for payments, savings, and to interact with DeFi applications without the risk of wild price swings. In countries with high inflation and devaluation of their local currency, they are used to protect against that phenomenon. But cryptocurrencies are not just for speculation. What are their real-world applications? More and more governments, companies, and entrepreneurs are exploring their use to solve real problems, from cybersecurity to data storage, digital identity, internet privacy, insurance claim management, and automation of legal contracts, even for sending international remittances at almost zero cost. The potential is so great that today we're only seeing the tip of the iceberg. And that's what makes this opportunity so exciting and valuable. Investing in crypto is not just betting on a price, it's betting on the evolution of the global financial system and the way money will move in the future. We are at the beginning of this revolution. Many compare this moment to the early years of the internet, a new territory misunderstood by the majority, but with gigantic transformative potential. Those who learn how it works now, who take the time to understand and invest strategically, could be positioning themselves to reap enormous benefits in the coming years. That's why this is not a call to jump in blindly or to be carried away by trends. It's an invitation to educate yourself, prepare, and plan so you can take full advantage of one of the most important opportunities of our generation. We now know what a cryptocurrency is and understand more about blockchain as a cutting-edge technology. Now we'll dive deeper into Bitcoin, what it is, how it works, and why it's considered a superior store of value. We'll compare it to gold and traditional currencies and see what makes it unique as a digital asset. If you want to learn more in detail about how each of these technologies works, I'll leave links in the video description and tags to other videos on this channel that go in depth on each topic. Just subscribe so you don't miss any new content. Give us a like and share this way. You won't miss any of our future updates. What is Bitcoin? Bitcoin is a decentralized digital currency that operates on a blockchain, a public and immutable ledger. Transactions are grouped into blocks and validated through a process called mining, where computers solve mathematical problems to secure the network. Its supply is limited to 21 million units, which prevents inflation. No one controls Bitcoin. It is open, transparent, and secure. It is designed to transfer value globally without intermediaries. So, how does Bitcoin work? It's decentralized digital money. Think of it as an internet version of gold, but much easier to send and store. It works thanks to a technology called blockchain, which acts like a giant public ledger where all transactions are recorded. No one can alter those records or print more Bitcoin because, again, it is programmed to have only 21 million units in total. So, every time you send Bitcoin, thousands of computers around the world validate the transaction to ensure that it's secure and legitimate. This allows you to move value quickly, globally, and without depending on banks or governments. It is money for the digital era. And why is Bitcoin increasingly being adopted as a store of value? Now, especially in 2025, Bitcoin is seen as a powerful store of value, possibly even superior to traditional currencies or gold. Let's start with the problem we all face: inflation. Since the year 2000, the purchasing power of the dollar has declined dramatically. In just 24 years, it has lost nearly 45% of its value. In other words, what you could buy with $100 now costs more than $180. Worse still, more than 20% of that loss occurred in just the last 5 years. This happens because central banks print money uncontrollably, creating more bills without real backing in value or production. As a result, your savings lose value year after year, even if you think they're safe in the bank. This is where Bitcoin offers a revolutionary alternative. Unlike fiat currencies, Bitcoin has a limited supply. There will never be more than 21 million units. No one can print more Bitcoin. It's programmed to be scarce, predictable, and transparent. It's like a form of digital gold, impossible to counterfeit or confiscate. On top of that, Bitcoin is portable. You can send it to the other side of the world in minutes. It's divisible down to 100 millionths of a unit, so it adapts to both large and small payments. And it's censorship resistant. No government can freeze, block, or reverse your transactions if you control your private keys.
Oh yeah! Get over here!
To understand why Bitcoin is considered better than gold or the dollar, let's compare their monetary properties. Scarcity. The dollar can be printed without limit. Gold is relatively scarce, but we don't know how much more may be discovered. Bitcoin has a mathematically fixed limit of 21 million.
Yes!
Portability. Physical dollars are easy to carry, but limited for large sums or cross-border transactions. Gold is heavy and expensive to move. Bitcoin can be transferred anywhere in the world in minutes with just one click.
Yes!
Divisibility. The dollar is divisible to a point. Gold is difficult to split for small payments. Bitcoin is divisible down to satoshis, 100 millionths of a Bitcoin.
Yes!
Verifiability. The dollar relies on trust in banks and governments. Gold requires inspection and custody and has been subject to fraudulent reserves. Bitcoin is verified through a public protocol and can be audited by anyone.
Yes!
Durability. Cash deteriorates. Gold is very durable. Bitcoin exists as data, impossible to destroy as long as the internet exists.
Yes!
Censorship resistance. Governments can freeze dollar accounts. Physical gold can be confiscated. Bitcoin, when secured properly, is impossible to block or seize.
Yes!
So who is the king of new financial technologies and the best investment option? Exactly, you guessed it. Bitcoin, king of kings, along with a new wave of DeFi technologies and altcoins. But let's also look at who is buying Bitcoin. There's a new generation of investors. While gold is dominated by older generations, Bitcoin is mainly adopted by people between the ages of 19 and 45. This means that as this generation earns more income and inherits wealth, the demand for Bitcoin may increase even more. Imagine a future where millennials and Gen Z prefer Bitcoin over gold to protect their wealth. That generational shift is already underway. An asymmetric opportunity. Think about this. The global asset market is over $900 trillion. Gold represents a significant portion of that. Bitcoin, in comparison, is still just a small dot on the map. If Bitcoin were to capture even a fraction of the gold market or global assets as a store of value, its price could multiply massively. For example, if Bitcoin achieved just 7% of a projected $4,000 trillion global market by 2045, its capitalization would be $280 trillion. With those numbers, an investment of $1,000 today could be worth more than $100,000 in the future. Can you understand what that means? Some models even project prices above $2 million per Bitcoin if it were to represent 15% or 25% of global commerce. Yes, it sounds ambitious, but remember, in the 1990s, few believed that the internet would transform the global economy. And just a little over a decade ago, Bitcoin cost less than $100.
Oh my
So
God!
we are facing a paradigm shift. Bitcoin represents a new asset class. Just like gold consolidated its value over thousands of years, Bitcoin could become the digital standard of value for the 21st century. Its technology, its program scarcity, its resistance to censorship, and its adoption by younger generations position it as a powerful hedge against inflation and economic instability. This isn't just about speculating on today's price. It's about understanding the paradigm shift it represents. It is already and will increasingly be a more open, transparent, and manipulation-resistant financial system. Once you're clear on what cryptocurrencies are, why they exist, and their potential as a store of value, it's time to talk about something fundamental: the investor's mindset. Because no matter how good the opportunity is, if you don't approach it with a cool head and a strategy, you're likely to fail. Most people approach crypto as if it were a casino. They buy because they hear a rumor or because everyone's talking about it. Then they panic sell when the price drops. That's how fortunes are lost. If you want to succeed, you have to think opposite to the crowd. Buy low, sell high, for real. We've all heard the basic rule: buy low, sell high. But in practice, most people do the opposite. They buy when everyone is euphoric and prices are at all-time highs. They sell in fear when prices drop. Why does this happen? Because we're human. We're hardwired to follow the crowd. The fear of missing out, FOMO, makes us buy high. The fear of losing everything makes us sell low. Being a successful investor means training your mind to do the opposite. Buy when no one is talking about crypto, when it seems dumb, when everyone says it's dead. Sell or stop buying when all your friends are asking you for advice on how to get in. Once you buy low and shift your mindset from beginner to super investor, you must secure your wallets properly to take full advantage of your investment. How? With the magic of compound interest. Another key concept that most ignore is the power of compound interest. Many seek fast profits, buy low today, sell high next week. But real growth comes from investing consistently and letting time and returns compound. For example, if you get an annual return of 20%, that may seem small compared to a 500% spike in a meme.
Oh no!
But over time, by reinvesting every gain, your capital grows exponentially. Investing $1,000 today with steady compounded growth can turn into hundreds of thousands over time. And if you add money each month, that effect multiplies even more. The difference between simple and compound interest. To clarify, simple interest is like doing a single trade. I buy at $50,000, sell at $100,000, and make $50,000. That's it. Compound interest is reinvesting your gains over and over again. Each new return builds on a larger capital. Over time, the difference is huge. Simple interest gives you a straight growth line. Compound interest gives you an upward curve that gets steeper and steeper. Starting early is key. Time is your best ally. Even delaying by 1 year can cost you hundreds of thousands down the road. That's why the best decision is to start today, even with a small amount of money, because every month counts. It's not about how much you can make in a month or a year. It's about building a plan that gets you to your goal in 10, 20, or 30 years. Think about this. If you decide to invest and add an extra $150 every month and you achieve a 26% annual compounded return, you could build a portfolio worth over $1 million in just a couple of decades. Start 1 year earlier and that number could grow by hundreds of thousands. If you can increase your monthly contributions over time, even better. You don't have to perfectly time the market. Many people get frustrated trying to guess the exact bottom or perfect top. That's impossible, even for the experts. But you don't have to be perfect. You just need to be consistent, invest with discipline, take advantage of dips to buy more, and avoid panic selling. In summary, thinking like a professional investor means ignoring the noise and trends, understanding market cycles and human psychology, using time and compound interest in your favor, being disciplined to buy when others are afraid, and being cautious when everyone is greedy. Before closing, let me clarify an important point about compound interest. In the crypto world, Compound interest logic can indeed be applied, but only when the platform or protocol allows you to claim rewards and reinvest them. For example, in staking, some DeFi pools, or products with auto compounding, and always assuming that the asset's price does not drop sharply. In contrast, in the traditional fiat financial system, compound interest tends to be more predictable because the rate is fixed or within a known range. That's why, when we talk about growing your capital over time here, we refer to applying the same principle in two different contexts. In crypto, reinvesting rewards whenever possible and assessing the token's risk, and in fiat, leveraging more stable instruments. The key is not the promise of multiplying by 1,000, but the discipline of consistently reinvesting in the right vehicle. Now that you know what Bitcoin is, how the crypto world works, and how long-term investments grow, you may be asking, what's next? The next step is to master the concepts and tools that give you real independence. Terms like private key, wallet, exchange, tokenomics, or gas fees can no longer be a mystery if you want to make smart decisions. Learning what they mean is how you protect your investment. But vocabulary isn't enough. You need to use the right tools, secure platforms to buy, sell, research, and store your assets. From CoinMarketCap to TradingView, these sites will be your compass in a complex but opportunity-filled ecosystem. You'll also need good judgment, knowing how to analyze a project not by what it promises, but by its team, its utility, its economic model, and its actual activity. For that, fundamental and technical analysis are your best allies. And finally, you need a plan. Without clear goals, discipline, and an exit strategy, it all turns into speculation. Define how much you want to earn, how you'll get there, and how much you're willing to risk. Diversify, protect your keys, keep records for taxes, and above all, stay calm when the market is tested. Because investing isn't about luck, it's about preparation. If you understand this, you're already one step ahead of most. Start today with whatever you have, slowly but surely. Financial freedom is not a myth. It's an achievable goal for those who study, apply, and persevere. If this video brought you value, subscribe, share it, and get ready, because this is only the beginning. Thanks very much. See you later.